when zero commission trades came out, I thought, man, I could do all kinds of things that I would never think of doing. So I went ahead and I bought one share of every company on the Dow Jones Industrial Average. And I told my buddies about it. I was snickering about it like, I could just buy one share of a company and not have to pay any fees. And that means I could just own one of everything. And they were like, John, there's index funds that do the same thing for you. I'm like, yeah, but it's a lot of fun. I could just buy them all. So I ended up buying the entire Dow Jones 30. What I realized after doing it is that it causes my trading platform to reload real slow every time because it has to, I guess, reparse all 30 of those companies in addition to all the other investments that I have, that it just really slowed down my platform and it wasn't desirable. So I thought, all right. Because I did like getting 30 dividends per month. Actually, it's 28 out of the 30 companies on Dow Jones pay a dividend. And so it was nice, waking up to emails saying that you received a dividend today, seemingly like every day. Because in addition to those, I bought a bunch of other dividend paying shares that pay monthly. So I'm always waking up to dividends, which, I think of the Tupac Dear Mama song. Even though I was slaying rocks, it felt good putting money in your mailbox. And I'm like, yeah, every morning I wake up and I see those dividend payout on equity. I'm like, yeah, it feels good putting money in your mailbox. But after all that wore off, it was fun for a minute and then it wears off and then you just kind of like grow tired of waiting for everything to load up. So I decided to try out this DIA. Now, the DIA share, it's strangely priced. It doesn't make much sense to me. It's priced like $330 right now. And so to purchase one share of every company on Dow Jones would cost $5,173. When I did it, it was obviously a lot less. So that's a lot of money. That's, you could do your IRA, your Roth IRA or traditional IRA. You could buy one share of every company and still have a little over $800 left to spend on something else. Or you could purchase 15 shares of DIA, which is the equivalent of $5,173. But I wanted to know, does the DIA index fund pay the same amount of dividends as if you would own one of each company as I did of the Dow Jones? And it turns out you don't. Actually owning one share of each of the Dow Jones companies that pays a dividend pays a higher dividend, but there's a caveat because those pay quarterly and DIA pays you a monthly dividend, but it fluctuates. So as we see here, the number of stocks with a non-zero dividend yield, there's 28. There's 30 companies, 28 pay a dividend. Number of stocks with zero dividends, 2, right? 28 plus 2 is 30. And if you take the average dividend yield of non-zero dividend yields, it's an average of $2.42. So that's the average. You know what? And I didn't consider that it's the average is $2.42. But if we took a look at the DIA dividend history, over the course of a year, it pays an annual dividend of $5.58 at a 1.66% dividend yield, but it's paid monthly. So contrast that with, it says here the maximum value is 5.04. I don't know if that's the maximum payout per year. Oh, and by the way, Boeing and Salesforce do not pay a dividend. Now, I made this video because I haven't seen anybody actually try to do this comparison. I didn't feel like doing all the math. I'm putting this idea out there for someone to make a better video than mine. So this chart here represents the entire payout of the dividends for each of the companies on the Dow Jones Industrial. So we can see here the estimated dividend for next year. If you sum all of them up, it comes out to $97.49. So we'll just say $97.50. Now that price there of $5,173, which is the price if you purchased one share of each company, and I divided it by the price of a DIA ETF share, it comes out to 15.19 shares. So then I took the 15.19 shares and I multiplied it by the DIA ETF annual dividend of $5.58 and 3/10. And that came out to $84.83. So that comes out to a difference of $13. Now I'm sure this math is missing something. For instance, the fact that DIA pays every month versus these companies paying quarterly. So receiving money every month has a different kind of compounding effect than receiving it quarterly. But $13 difference is a pretty big chunk. So you guys decide what you want to do. I've sold all my Dow Jones individual stocks and I'm just surrendering to the DIA ETF, knowing that I'm getting a lower dividend payout and I don't like it. And I almost sitting there thinking like, you know what, the next crash, I'm just going to buy one share of everything. I might put it into like a company that I don't use all the time, like Robinhood or Webull or something, and just let the dividends collect there, and I don't got to see it all the time. It's just like a long-term investment. And as companies get added and subtracted from the Dow Jones, I'll just add them in. I'm not going to remove anybody, but I'll just add in the new companies. And over the course of my lifetime, see what I end up with in the end. But to have it all in my primary trading account, don't want to do it. I'm just going to stick with the DIA, keep it simple. But I'm really making this video to send it to my buddy who said, hey, John, why don't you just get the index fund, DIA? Save yourself the hassle. Well, that's why I'm getting $13 less in dividends annually for the convenience of not having to watch all the shares refresh slowly. So I guess, hey, $13 trade-off, you let me know. And hold on, let me say one last thing. My math may be completely off, so if I'm wrong, in the comments, let me know what I did wrong. Is that where the management fees come from and go to? So if I'm wrong, like, don't take any of this as financial advice. I'm not a broker. I'm not licensed. I'm just sharing what my buddies told me. Johnny, just get an index fund. And I'm like, I don't know. I like getting all these dividends. So what would you prefer? Would you prefer seeing all 30 of those companies refresh real slow in your browser every single day? Or would you just like a single ETF that pays a smaller dividend, but it pays it every single month, whereas the other companies pay quarterly, and it's kind of staggered. They all don't pay on the same day. They may not even pay in the same month. So which do you prefer? Happy trading, everybody. Hope your investments pay off. May the force be with you, and I'll see you in the next video.